This is Alan Bush with ADMIS with the daily financial forecast for Thursday, November 19th. Starting out with the stock index futures, we did see some very good gains yesterday afternoon. This after the Fed released the minutes from the October FOMC meeting, which in my opinion were a little bit dovish on balance, although many analysts think otherwise, some saying it was a bit hawkish. But the markets actually reacted as if it was dovish, in that stock index futures advanced, other markets such as credit markets firmed, the dollar weakened, precious metals advanced. So I do believe that this was at least a slightly dovish on balance report from the Fed. Also some follow-through gains today for the same reason. We did have several economic reports today which were a little bit better than expected, not really anything that would change anyone's long-term outlook on the economy. We do feel that once the December Fed meeting is out of the way, that we will see a new leg up in stock indices to new historical highs. Now, moving over to the currencies, the dollar index very quickly coming under some pressure yesterday after the minutes from the October Fed meeting were released. This after, just earlier in the day, the dollar index had advanced to a 7-month high. Also seeing some follow-through weakness today in the dollar index for the same reason. And for the same reason, most of the foreign currencies are trading higher. In fact, we have the pound gaining, even though we did have retail sales in the UK coming in weaker than expected, showing a 0.6% decline. That compares to the estimate of a 0.5% drop. Also, we had UK manufacturers indicating that output could deteriorate to some degree in the next 3 months. Also, the yen trading higher after the Bank of Japan leaving credit policies unchanged as widely expected, with a minority opinion believing that there could be some type of more accommodation. Now, moving over to the interest rate futures markets, good gains yesterday afternoon in response to those Fed minutes, especially at the long end of the curve. Also seeing some follow-through strength today. Oddly enough, though, the probability of a rate increase at the December meeting moving up a little bit from 68% yesterday morning to now 70%. Our feeling is that whether or not the Fed raises rates, that after the meeting we will see the long end of the curve trading higher. In fact, I think we will probably see a new leg up for the 30-year bonds after the December meeting is out of the way. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.